The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 23rd day of June, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast, that's our live training room, so that's private. Either you have to be one of our traders or taking your 1-week free trial. If you've not yet taken your 1-week free trial, when Michael comes on at the top of the hour, he'll walk you through step by step how to take the trial. There's no credit card required. You'll get 5 consecutive trading days. We'll get your indicators up and running today. Your trial will officially start tomorrow, and it'll run all the way through next Monday. And when you take the trial, you're not just getting access to the live training room. What we do for 5 consecutive trading days, we treat you like you were already a member, a full-fledged passport holder with access to everything. And again, there's no credit card required because we want you to be focused on what's being taught. We want you to learn. Whether you end up becoming a member or not, you'll learn some very valuable things during your trial, which you'll carry into your trading career, whichever direction you choose to go. We want you to be able to make a well-informed, intelligent decision at the end of your trial as to whether or not trading is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back at 12 noon Eastern for this broadcast, which, unlike the morning broadcast, is open to the public. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll immediately have access to the question box, so you can ask questions and participate in the discussion. I'm not able to monitor the YouTube chat until Michael joins us at 12 noon Eastern. But the one that's right in front of me on this computer, I can. So we invite you to ask questions and participate in the discussion. Now, there'll be days you're out of the office, away from your desktop. Maybe this time of year you're on vacation, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. Well, you can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN CFRN. That's the Christian Financial Radio Network since 2005. But you don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. If you're new to our little corner of the world, the YouTube channel is actually a great way to get to know who we really are. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. However, it is a great resource to have at your fingertips, and it lets you know we've been around a minute, or two, or a few. youtube.com/CFRN. This is our schedule for each afternoon broadcast, so we're going to dive right into our daily devotional. The topic we're on right now: why should I trust the Bible? Today's scripture is Genesis 15:16, and I'm going to share it with you from the message. No, today it's from the NIV translation. In the 4th generation, your descendants will come back here, for the sin of the Amorites has not yet reached its full measure. Again, that's Genesis 15, verse 16. Now we're on day 5 of 6, so if you missed the first 4 days, you can always get caught up on the YouTube channel. So, a lot of questions have been answered, but a question a lot of people have: what about all the wars in the Old Testament? And it's important to understand that the Old Testament and the New Testament, while they're both in the same Bible, there's a huge difference. That difference is called Jesus. The New Testament, the New Covenant, that's what we live under. And that's what you find in the New Testament. But still people want to know, well, what about all the wars in the Old Testament? Gosh, God was so angry. Many people wrestle with the question: how could a God of love command the wars of the Old Testament? Like the tales of violence against women that we examined back on Friday. It's hard to square some of the horrors described in the Old Testament with a view of God as our loving Father. To begin answering this question, let me remind you first of something that I pointed out Friday. Much of the Old Testament is narrative, not didactic. It neither condones nor condemns war. It simply gives an account of it. That said, it is clear that some wars were commanded by God. How do we make sense of those? It helps to bear in mind 4 elements of God's work in the world. Number 1, judgment. 2, accommodation. 3, time. And 4, language. In terms of judgment, both the Old and New Testament present a moral portrait of a God who judges evil. One of the means of God's judgment in the Old Testament is war. Sometimes God's disobedient people are on the receiving end of his judgment. Sometimes they're his means of judging other nations. When that's the case, he lays down for his people rules of war that center around control, justice, fairness, and kindness in the use of the sword. Only in the exceptional case of the particularly depraved Canaanites was there to be total destruction, and only then, after centuries of time, to repent. Sound kind of familiar? Yeah. This may be the Old Testament, but boy, does it relate to what's happening in the world today. With our 21st century sensibilities, we may dislike the idea that God's judgment in the Old Testament came through violence. But if we're honest, it's unlikely we'd want to worship an apathetic God whose heart didn't break for the social justice issues that break ours. The second thing to keep in mind is that for the purposes of revelation, God accommodates himself to us. The central and foundational idea of the Old Testament is that God invites people to freely choose to love, serve, and partner with him. This commits him, however, to working with us humans where we're at, with our strengths and weaknesses, and within the confines of history. Therefore, God reveals himself progressively. Imagine a parent who gets down on the floor to play with their toddler. That makes sense when the child is very young, but as their skills and faculties grow, the way the parent interacts with them evolves as well. God's involvement in war in the Old Testament doesn't suggest that he is essentially violent, but rather that his judgment of evil took that particular form at that particular time and has evolved in the centuries since. Thirdly, the timing of God's judgment is in his hands alone. The people of Israel weren't to go around fighting others on a whim. Rather, at specific points in history, particular evils needed to be ended. God was willing to wait 430 years before, as a last resort, bringing his judgment upon the violent culture of the Amorites. Scripture reveals God is patient, not quick to condemn. Finally, biblical language needs to be carefully considered if we're to understand the wars recorded in the Old Testament. Rhetoric is key to any text. For example, we see metaphor and hyperbole employed in Joshua 10:40. We use these same techniques when we tell a friend that our sports team annihilated or crushed the opposition. If we zoom out and look at the big picture, God's overarching goal is to bring blessing and salvation to all nations. For a specific, relatively short, strategic time period, God sought to establish the nation of Israel with a view to fulfilling his long-term global goal of redemption. In so doing, he would also punish a group of people with his judgment after they had been given hundreds of years to repent. The hard-to-swallow passages of the Old Testament detailing periods of war are no reason to doubt the Bible or the loving God who inspired it. May you be comforted by the truth that God isn't wrathful in spite of being love. He is wrathful because he is love. Now, that's a lot to think about. Let's pray. Heavenly Father, you are the God of perfect timing and justice. Even when we don't understand the delays, help us to trust that your purposes are unfolding according to your plan. Teach us patience and strengthen our faith as we wait on you. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Monday. I hope you guys enjoyed that Bluegrass Festival this past weekend as much as I did. Got me to thinking I could be a travel blogger. Just go see the world and blog about it, take pictures. I hear they can make pretty good money and they get free accommodations. That's even nicer. Let me give you the numbers from around the world. And if you missed my travel log, it's in the Breeze channel in Telegram. All right, here in the U.S., cash markets, the indices, the Dow's up 24 points. NASDAQ is up 58. S&P 500 is up 14. The Russell 2000, or man in the street, is down 1 point. In the commodity basket, crude oil is down 29 cents. Make that 20 cents. Trading 73.64 last. Gold is up $17 and not make that $18.20. Trading 34.0390 last. Silver's up 20 cents. Trading 36.22 last. In the Asian markets at the close, the Nikkei dropped 49 points. Shanghai rose 21. The Hang Seng gained 158. And in the European markets at the close, FTSE down 16, the DAX down 81, the CAC down 52. Not a mover or shaker in the whole bunch. We had a mixed day in Asia. It was a red day for the UK. And it's a mixed radio Monday here in the US of A. We have 3 of the major indices in the green. Not by a lot, but green nonetheless. But we got the Russell now down 2.5 points. And I know some of you are wondering, oh, is today the day that the Russell leads the other indices? Well, you know, sometimes we do see that, but it's not a trading plan. When it happens, and you should just simply be aware of it. Let's take a look at the global news. Now, there's nobody on planet Earth that doesn't already know this, but the U.S. joined Israel's military campaign against Iran Saturday, using B-2 bombers to target 3 nuclear sites: Natanz, Isfahan, and Fordo. In a speech to the nation, President Donald Trump called the strikes a success, saying the military destroyed the facilities. A final assessment of the impact to Iran's nuclear program is ongoing. Operation Midnight Hammer began around 12 a.m. Eastern Friday night when 7 B-2 bombers launched from Missouri east to Iran, with bombers also flying west as a decoy. After an 18-hour flight with minimal communication, the bombers struck Iran's heavily fortified Fordo and Natanz facilities in the first ever operational deployment of 30,000-pound bunker buster bombs. At the same time, U.S. submarines launched Tomahawk missiles at an Iranian nuclear facility in Isfahan. The stealth bombers, their strikes took place between 6:40 p.m. Eastern and 7:05 p.m. Eastern, around 2 a.m. local time. No shots were known to have been fired on U.S. aircraft or personnel. Think about it. We've heard about these stealth bombers. Now, they flew right in, and they didn't know what hit them until our pilots were on the way back home. Pretty amazing. Trump suggested if Iran does not pursue peace, the U.S. could strike further. Iran said it is reserving all options for a response and has not yet retaliated as of this writing. Israel said an Iranian missile barrage early Sunday wounded at least 80 people. Democratic congressional leaders have meanwhile criticized the U.S. strikes as a dangerous escalation. Trump made the world a safer place. Period. And yeah, Iran may try to strike back, but what's their big plan? Blocking the Strait of Hormuz? After taking out these nuclear facilities and their bombing installations, what are they going to do? Throw rocks? Admittedly, that did work for a young shepherd boy named David back in the day. Moving on, Tesla debuted its robo-taxi service yesterday, releasing roughly 10 driverless Model Y vehicles in parts of Austin, Texas. CEO Elon Musk says the rides will cost a flat share of $4.20 and hopes to ramp up to 1,000 vehicles within months. Now, we have some driverless taxis here in Phoenix. Trying to think of their name. It starts with a W. They got this big black thing spinning around on top. It's not Wayfair. No. I'll think of it. Anyway. Oh, Waymo. Tesla is not Austin's first robotaxi. Amazon's Waymo is the industry leader. That's what we have here in Phoenix, boasting over 250,000 paid trips weekly across Austin, Los Angeles, Phoenix, and San Francisco. Alphabet's Zoox is available for employees and guests in Las Vegas and San Francisco. As with Waymo and Zoox, Tesla's Pilot will have a driver accompanying the vehicles. The company will also monitor its robotaxi service remotely. The launch came as Texas Governor Greg Abbott signed a bill requiring autonomous vehicle operators to acquire a permit beginning in September. And, well, I'll save that for the other news article. And you guys know I'm not a sports guy, but I know a lot of you are, so you already know. The Oklahoma City Thunder clinched the NBA championship last night, defeating the Indiana Pacers 103-91 in Game 7 of the finals. The win marks a new era for the Thunder as the franchise lifts the Larry O'Brien Trophy for the first time since 1979. But back then they were called the Seattle Supersonics. Team relocated in 2008. So, this is really the first championship win for the Oklahoma City Thunder. Let's go to Wall Street. Wall Street is closely watching escalating tensions in the Middle East after President Trump confirmed that the U.S. launched a surprise strike on Iran's nuclear sites late Saturday, making the country's official entry into the two-week-old conflict. Markets have held mostly steady in the aftermath of the escalation. U.S. stocks opened modestly lower today, but rebounded by mid-morning. And additionally, Bitcoin prices, often viewed as a barometer of risk appetite, edged around 2% higher to trade near $102,000 a coin. In case you didn't know, Bitcoin has now been over $100,000 for 40 consecutive days. Now, last night when the futures market opened at 6 p.m. Eastern, boy, were there gaps. Oh my goodness. When we go to the charts in a bit, you'll see them. And Tesla's stock popped this morning, up 8% on the session, over 8%, because of the robo-taxi test kickoff. That should make Tesla stock owners a little happy. Iran's parliament has pushed the nation to close the Strait of Hormuz, according to state media, but left the final decision to choke off the key waterway to Iran's Supreme National Security Council. What's left of them. Vice President J.D. Vance shot back Sunday that such an action would be suicidal for Iran, as their entire economy runs through the Strait of Hormuz. That'd be a Barney Fife move. Shoot yourself in the foot. I know some of you are like, you're not old enough. You're going, Barney Fife? Dude, who is this guy? You need to go watch you some Mayberry RFD, the old TV show. And I know a lot of you grew up on it like I did. Defense contractor stocks may help protect your portfolio from a summer of geopolitical risks. Now, I'm quoting someone else here. Innovator ETFs Chief Investment Strategist Tim Urbanowitz. He had this to say on Yahoo Finance. I think using an ETF like an Invesco Aerospace and Defense, the symbol is PPA. That gets you broad exposure, and it probably makes a lot of sense here, especially when you think about this reconciliation bill that's coming out. You're looking at an additional $150 billion in defense spending. You pair that with looking at this conflict. What's going on in Russia and Ukraine, defense spending is not going down. It's not going down in the U.S. It's not going down globally. Some other stocks you might have some interest in taking a look at are GE Aerospace, Boeing, Lockheed Martin, RTX Corporation, and Northrop Grumman. GE Aerospace is up $3.31 a share. We got some econ numbers this morning, and U.S. existing home sales improved slightly in May. A small sign of life for a housing market that's been rocked by high mortgage rates and growing economic uncertainty. Sales of previously owned homes rose 0.8% from a month earlier to a seasonally adjusted annual rate of 4.03 million. Economists had expected a 1.3% drop to a rate of 3.95 million homes. Existing home sales are counted when a sale closes, meaning most homes went under contract a few months earlier at the beginning of the traditional spring home buying season. So far, signs point to a slow spring. Contract signings dropped sharply in April, and homes are spending more time on the market than they were a year ago. Well, we know who to thank for that. Jerome Powell. Too late, Powell. Federal Reserve Governor Michelle Bowman supports a rate cut as soon as July, becoming the second central bank policymaker in recent days to be explicit about an easing of monetary policy in the near term. Bowman made the argument for such a move in a speech this morning, saying that inflation has declined or come in below expectations over the past several months, and asserting that trade policy will only amount to minimal impacts on the Fed's preferred inflation measure. Jerome, what are you thinking? Now, if they use the dot plot, we will get a rate cut in July. But if Jerome's still worried about, what may happen down the road, then we won't. From Bloomberg, the dollar erased its advance today after the Federal Reserve's Michelle Bowman said she supports reducing interest rates as soon as July. The dollar was strong right after the strike. And oil has slipped or dropped as U.S. President Donald Trump pushed for lower prices, and fears faded that the conflict with Iran would immediately disrupt supplies from the Middle East. And beyond that, if you're here in America with me, we have more of that liquid gold and natural gas under our feet than any country on planet Earth. So I'm sick and tired of being dependent on foreign oil. Drill, baby, drill. And last from Wall Street. Early stage founders, listen up. You'll want a front row seat at the Builder stage on October 27th at 1 p.m. This session at TechCrunch Disrupt 2025 brings together Nina Agdajian, partner of Index Futures, Jerry Chen, general partner of Greylock, and Vivian Fega, general partner, all of whom will share their 2026 investment priorities across AI, data, cloud, robotics, and more. This seasoned group of VCs give you their take on emerging sectors and innovations that are capturing their attention. Want to find out where the smart money is headed next? Either attend the conference or just read the news. Disrupt 2025, the big conference, happens October 27th through the 29th in San Francisco. If you register now, you can take advantage of low pricing with up to $675 off tickets before the rates go up. Okay, that's it for the global news and the Wall Street news. That makes it time for the local news. Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, and silver. We're currently in week 360. Over the last 360 weeks, we've issued over 19,980 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Last week we wrapped up with 2% being stopped out. Now, since the markets opened last night at 6 p.m. Eastern, we've issued a total of 14 alerts. Valerie did the recap this morning at 8:30 a.m. Eastern. At the time she did the recap, we were still waiting on the outcome of 6. That gave us 8 actionable alerts, of which so far nothing has been stopped out. But the week is young. But I got to tell you, coming off a week of 2%, that's pretty sweet. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Every logic alert has an entry price, an initial target designed to help you get your goal for the day, and then usually additional targets, and then a final trade to target. Yes, you can trade them, and if you did last night, you probably got big smiles. But the real purpose of the logic alerts is to teach you how to read a chart. Now, whatever profession you want to pursue in life, you know you're going to have to be able to read the textbooks and the journals and all that kind of stuff. But if you choose to be a trader by profession, you got to be able to read the charts. And unlike every other career, there's no words or sentences or paragraphs or punctuation. When you look at a chart, you're looking at a completely new language. And until you learn how to read that language and then eventually talk the language, it's going to be very difficult for you to become a consistently profitable trader. So again, if you want to trade them, be my guest, but make sure you do use them for the purpose intended, and that's to teach you how to read a chart. Now, 360 weeks, I know seems like a very long time, but quite a few years before we developed Logic 247, we had our original alert service, the concierge trade alerts, and they're different. Number one, they don't come out around the clock. They're typically posted 5 minutes ahead of the Globex Open. So we know today's the Monday session, but the Monday session began last night at 6 p.m. Eastern. So what that means is all of our traders and all of our trial members had all of these targets last night, 10 minutes before the market opened. It's usually 5 minutes. S&P 500, the Dow, the Russell, crude oil, the NASDAQ, gold, and silver. So as we go through the individual charts and you see these targets on my charts, just remember all of our traders and all of our trial members had these targets 10 minutes before the market opened. Now, there were such huge gaps last night, the CTAs might not have been as helpful as they typically are, but we stand by them. Here we are, the S&P 500 E-mini futures, the bellwether, as it's called. And look what we got going on here. Now, this potential major resistance, we called that months before price ever got there because we knew how to read a chart. We knew this area right here was going to be major resistance. We also knew that this green line, the BBC, would be major support. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. It stands for bull, bear, cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. But here's the really cool part. As I said, price always reverts to the mean. So when price pulls back to the BBC like it did there, and there, and there, and there, the pullback holds more often than it doesn't. However, we do know eventually price will trade through. But then what happens? The pullback holds, the pullback holds, the pullback holds, and then we get a close below. Now when the market finds support, it's going to go look for resistance. So this indicator here, it's called the CFMA1. I refer to it as blue and climbing, red and falling. One is obviously bullish, the other bearish. So today's session, we ran right up to red and falling just as we did on Friday. Okay. Now Friday we closed back above the BBC, but we're currently below it. We do have a green body on this candle. Is it possible that today could be the day that we close the session this afternoon below the BBC? Yeah, it's possible. And the last time that happened, back on February 21st, look what happened. And then when price closed back above the BBC on April 24th, look what happened. If we start to break down, we've got potential support here, 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 and here. Okay? No secret, no magic formula. It's just a matter of being able to read the chart. Now, just because you learn to read the chart doesn't mean you're going to know what will happen next in the market. Nobody, no man, no machine, no algorithm, no AI, not nobody, not no way, not no how, can know what will happen with 100% certainty in the market next. But you can know with a great degree of certainty what the next high probability move is. I might have mentioned last week we had, I think, over 70 alerts and 2% got stopped down. So now the daily chart's important. Whether you trade stocks, futures, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. Institutional traders, the deep pockets, the ones who move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? It has everything to do with account size. So I challenge you to spend 2 minutes with the daily chart of whatever you're about to trade on the smaller time frames every day for a month. If you do it, I don't think you'll go back. Number one, you can see what the deep pockets are doing. You get a free look over the shoulder of the best and brightest out there. And you're able to identify months ahead of time where the market's likely to find resistance and where it's most likely to find support. Weeks, even months before it actually happens. And if that doesn't help you with your trading, I don't know what will. Now, all alerts are created on the 30-minute chart. Both the Logic 247 alerts and the Concierge Trade alerts. The vertical line you see here separates today Monday, here's Friday, Thursday, Wednesday. Now, let me stretch this out a little bit so you can see it a little better. So this was the opening candle last night. Right here is where we closed on Friday, okay? We gapped all the way down to here. And then we dropped just a little bit lower. And then buyers came in and took us up to the underside of the short target. See, I have no way of knowing if the markets are going to gap or how much they're going to gap, and I don't worry about it. Because with futures, typically the only time you get a gap is on Sunday night. Or when Trump strikes Iran. Okay? So, price came up and hit that underside of the short target, resistance. Buyers came in here. Red and falling turned to blue and climbing. That put us above the BBC. So now we're bullish, expecting higher prices. And as you can see, price rode right up to the weekly trading zone. And I want you to look here. You see how the black step line and blue and climbing, you see how they're parallel to each other? Well, once price ran into the weekly trading zone, We expect price to find resistance when it rallies up to a zone. When price drops to a zone, we expect it to be good support until proven otherwise. Now, do you see how right here the black step line crossed from the left side to the right side of blue and climbing? Sent price all the way down to the short target. And support will always send the market looking for resistance. So we got up to red and falling, resistance, that sent us back to the VBC. Then back to red and falling, and then back to the VBC, and then we finally broke through. Now these are last week's weekly trading zones. You see, the weekly trading zones, which we've published for our members now for 15.5 years, they come out Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So on tomorrow's broadcast, you'll see this week's zones, which our members got this morning at 6:15 a.m. Eastern, and trial members. So any alerts I put out on a Sunday night have to be based off last week's zones. And as you can see, the zones have carryover power. Okay. So we hit the long target, and we actually spiked up to an area where I would not have necessarily looked for resistance, but buyers lost their confidence, and that sent price all the way back to the short target for a second time. And as you can see, this low right here, this was a red candle all the way down, but by the time the 30-minute candle, well, it's still working. There's still 13 minutes left in the life of this candle. But this low right here, you see right there where the step line crossed red and falling, and it led to a pullback to the BBC? That's what we expect. See right up here, when the step line crossed to the right side, what happened? Pull back to the BBC. It's over and over again and again. So now we're below the BBC. We're printing after this huge red candle, which this has all happened in the last 17 minutes. There's 13 minutes left in the life of this candle. This thing could go red. We're below the BBC. Blue and climbing and the step line are directly above price. That's an indication that blue and climbing is probably on its way to becoming red and falling, which is bearish. And there we go, turning that candle red as expected. Now where might it potentially find support? Right there, 60.12. Below that, we're looking at the short target, and then the low of this candle right here, 59.94, and then this area right here, 59.90, and then you've got the zone from last week below, and then the low of the opening candle last night down at 59.59. The Dow. This was the gap lower open on the Dow. Okay. We opened here just below the short target. We had a red candle all the way down, taking us back to Thursday's lows. See that? Look at the horizontal line on my cursor. That's market structure. Okay. We'll teach you market structure. We'll teach you how to read a chart if you're serious about learning how to trade. Now, when there's a gap in the futures, they almost always fill within the same session. And as you can see, that's exactly what happened. This was the close Friday, and right there we closed that gap. So we got a leg. Now, see how they're running parallel? The black step line and blue and climbing. But then the step line crosses to the right side, and what do we get? go back to the BBC. Now right here, there's a bullish cross. When you have a bullish cross, that's when the blue line gets above the green line and it leads to an extended move. The first time price revisits that area will almost always be good support. And it was. I mean, we spiked it a little bit, but it turned the market right around. Sent us all the way up to the long target and the weekly zone from last week. Resistance is always going to send the market looking for support, which it found at the short target. See how blue and climbing up here has already turned to red and falling? We're below the BBC. By the time this broadcast is over, there's a good chance we'll be back to that short target. Now right here, potential support. Right here, potential support. Then of course at the target, and then where we opened last night, and then the zone below. You can learn to read a chart just like that. Again, you don't know what's going to happen next. It's not possible. There's too many players, too many variables. Okay? One guy on the other side of the world get a little indigestion and decide he needs to go to the corner drugstore and get some Tums or whatever, Rolaids, I don't know. So he's got 100 contract order in to buy the ES. So he pulls that order because he doesn't want it to execute while he's away from his desk. But other traders see that, wow, there was a guy trying to buy 100 contracts, or there were, maybe 1,000 contracts on the bid. But boom, it changes. There's 500 on the bid, and all of a sudden it goes to 400. People go, what's up? See, that's why it's impossible to know what's going to happen next. But you can know with a high degree of certainty, 2%, what the next high probability move is. Our average over the 19,980 alerts, we've averaged on a weekly basis 20%. 20% or less, like last week. Now, notice the low that was put in last night off the open. What did it do? It filled this unfilled gap. This is Monday, this is Friday, this is Thursday. So we had a gap higher open Friday night, ran right into resistance at the zone. Now, one of three things happens when price encounters a weekly trading zone. 70% of the time, it's going to be consolidation like this and like this. 20% of the time, it'll be rejection. 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there, like this candle. See, it sliced through the zone like it wasn't even there, but when it ran out of steam, what did it do? It retraced back to the zone it sliced through and is now continuing in the direction of, it's already continued in the direction of the slice. Does that happen every time? Very few things happen every time in the markets. Does it happen more often than not? Yeah, it does. NQ. Okay, this was the gap lower open last night. Came up, bumped our head on the underside of the short target. Step line crossed, red and falling. Red and falling became blue and climbing. And off we go. And you see how these are running parallel until the step line crosses. Then we get a pull back to the BBC. And then we get another leg right up to the long target. Now, this last bearish cross, that was in play on Friday. So that had already been taken care of. So price ran up not enough to get to this area, which is what the long target is based on. But after hitting the short target, Support will always send us to resistance, and resistance will always send us to support. It's just how markets work. I didn't create that, I just figured it out. So that's one of the beautiful things about becoming a member is you don't have to make the same mistakes that Michael and I and every other trader's had to make. Trust me, any mistake that can be made in the markets, we've made it in spades. So we can save you a lot of time and a lot of treasure. Instead of stumbling and fumbling around for years, you can be up and running in a couple weeks, couple months. Everybody learns at a different rate. So crude gapped in the other direction, okay? And then we came all the way back to the BBC. The pullback held for quite a while. We consolidated there. But with red and falling overhead, it pushed us down to the weekly zone below, which we expect to be support till proven otherwise. Support sent us back to the BBC resistance. So now the market's got to go find support. And look where it found it. At the zone that was published last Monday morning. Zones come out Monday morning, 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. So the pullback held, the pullback held, and the pullback held. And we had consolidation here at the zone. Now we've pushed all the way back down to the short target. We've spiked it. And we got right to the top of this window of opportunity that we drew last week, but we didn't really penetrate it. We shall pick up on gold when I come back. Right now, Michael's going to give me a break, and he's going to give you guys a recap of everything that happened this morning in the live training room, then do a little live trading on the TradingView platform. I'll come back, finish the recap of the alerts, and wrap things up with our good word for the day. And good. I'm trying to get your chart centered here. Come on, baby. There we are. Looks good. I just got a pop-up. You can either end the webinar for everyone or you can leave the webinar. So I'm going to hit cancel.
That's probably a good idea.
Yeah, I don't know. I don't know what caused that to pop up. But anyway,
all right.
Things look good.
All right, here we go. Good afternoon, everyone. Today is Monday, the 23rd day of June, 2025. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. You just click on that purple button and it will bring you to this page. This page right here. On this page, all that we ask for is your name, your email, and your phone number down at the bottom. Gives you TradingView login ID. All right. If you don't have a TradingView login ID, this is your opportunity to get one. Click on this link right here. It's going to bring you to this page. Just follow this video right here. All right. This video right here at the top, TradingView platform. Click on this. When you do that, you get in here. And look, they have the whole assortment of them in here now. Essential is all you need, really. All right. It says if you click on monthly right here, it's $14.95 a month. That's, you actually get a 30-day trial. All right. You actually get a 30-day trial on that. So you can, you get the 30-day trial on that. You're going to have to pay for real-time data. You don't get real-time data for free, but the real-time data is only $7 a month. Okay. So choose Essential. Then that's all you need. Once you've done that, then you see in here, you have all these benefits. You don't really need that or that or that or that or any of these other things down here. We use this one, but we need to use that one. You don't. Okay. All right. Sorry. Spent way too much time on that. All right. So in the spreadsheet, now I made a couple of mistakes today. I made 3. One of them didn't cost me anything and 2 of them did. We ended up the session stopping out on the ES for minus 10 ticks and the NQ for minus 60 ticks on mistakes that I made. But anyway, we ended up Ended up plus $982.50 a contract. All right. So this morning, the 23rd day of June 2025, we're up 59 ticks on the NQ, 6 ticks on the Russell, 42 ticks on gold, and 19 ticks on the ES. We're at 982.5 on the morning session. Today it took 5 minutes and 2 trades to get to the goal for the day. That we're up $1,125, and we took a total of 17 trades this morning. So on the month now, we're up $11,912. That's over 13 trading days, averaging $916 per contract per 2-hour trading day. Now we have 5 business days left to get that over 1,000. I hope I'm going to be able to do that. What was it last month? 1,086. The month before that, 1,800. The month before that, 1,600, 1,400, 1,600. This was last year. Okay, so this month is our slowest month of the year, average-wise. I'm going to try to get that over 1,000 by the end of the week. Anyway, on the year now, we're at $152,382 with 1 contract, over 104 business days, averaging $1,465 per contract per 2-hour business day. Following the 2420 blueprint, which says if you get your goal for the day and you stop trading, the goal being $100 per contract. If you achieve the goal and you quit trading, and you add 1 contract for every $2,000 that you earn, so it works out to be about 1 contract per month. Then, if you did that and did everything just like me this year so far, you would have only had to work 12.93 hours so far on the year. 12.93 hours. And you'd be up $57,252. Okay, you'd be trading 6 contracts right now and be at $57,252. Averaging $4,426. Averaging $4,426 per hour so far on the year. Now, let's see. Yeah, so that was it. So let's get into the actual trades. Okay, the actual trades that we did. Now, the majority of our trades today were actually on the NQ. So we'll start over here on gold and work our way over to the NQ. Right. We didn't have that many trades, but it looked like these 2 charts were out of, not these 2, but these 2 charts were out of view when I came back from the break. So it seemed like there might have been some big movement during the break. And there was. Look at that. Big movement during the break. All of that movement down right there. Okay. Interesting. Now, where did the markets open up yesterday? Right here. Right. So all that gapping stuff has been done. Daily chart. Yeah. Interesting. All right. Anyway, what we did today on the 9 range here on the Russell, in my little world, there was some big movement down right here during the break. Here we are on the Russell. We started out here, our very first trade on the Russell this morning. We picked up 5 ticks. And then the next trade, we picked up 1. That got us to 6. And then we had 1 more break-even trade in here somewhere that it doesn't look like I even marked. Okay, but we only had those 3 trades this morning on the Russell. Now, if we look at this during the break, how many opportunities did we have in here during the break where it came off the midpoint out of the overbought right there? Right here. Wouldn't have done any of it. How about the other way now? You'd be going long off the midpoint coming out of the oversold. There really were not that many trades, really. Really were not that many trade opportunities during the break today. Bart. Okay, I will set something up with you. You and Ronnie, both of you Massachusetts guys. I'll get you guys straightened out. All right. Let's see, I'm looking for opportunities in here during the break. you're above the YBR, so you're only looking for longs off the midpoint here, but there just haven't been any. And you below the YBR again, so you're looking for shorts off the midpoint. And there's one, there's another one, there's another one. There's three of them right there, three in a row, right there. And now you're above the YBR again, and you're looking for longs off the midpoint, and you don't have any. All right, and that was it for the gold. I mean, for the Russell. Sorry, we're at +6 for the Russell. That wasn't the Russell. That was gold. Sorry, that was gold. No, that was the Russell. I just did the Russell, right? Not gold. Just make sure. Because on gold, we had more than that. More than 2 trades. Yeah, okay, that was the Russell. All right, so on gold, we had, starting here, our first trade on gold here, we picked up 25 ticks on the very first trade. Then we picked up 2 there to get us to 27, and then 10 there to get us to 37, then 5 to get us to 42. And I believe that's where we stopped trading the gold. Gold did have some really nice opportunities this morning, right? Right here was one. Right here was one. Come to here, you would have been above the YBR now, looking for long opportunities. So, right there was one. Then you blow the YBR here, looking for shorts. So there was one. There was one. There was one. There was one. So there's some pretty good opportunities there on gold today. We ended up with +42 ticks on gold. All right. And right now, it's not in a place where you really want to trade. Neither is the Russell right now. The ES is just about in a place. If you get an up close on this on the ES, you could short that. I'm going to do the ES right now. So we might be able to get this trade off. All right. I will see here on the ES. We have a low on this. Now we have a low on this down here, 1775. So I'd sell 1975. Now it's not as attractive to me, okay? Because it's not going to be at the midpoint anymore. A minute ago it would have been attractive, but it's not right now. Let's go back here to the beginning of time today. All right, here we are at the beginning of time today. On the ES, our first trade here on this is where we got the gold. We've got 9 ticks on this trade right here. And then we had a break even on the follow-up trade. And then here we got 4 more to get us to +13. Then we had a break even there. Then we had 16 ticks there to get us to 29. And then this was one of my last trades, and I made a mistake, and I stopped out. -10 put us down to 19. During the break, there was a lot of movement here during the break. So let's see what we had to trade here during the break on the ES. Now follow me on this, all right? If you go all the way over here and you watch this end over here, all right, you're below the YBR right now. So you're looking for price to pull up and hit the midpoint when it goes into the overbought, all right? Now it's in the overbought, it's not at the midpoint. It's not, still looking for it to hit the midpoint and close off of the midpoint, all right? So you didn't get it there. Came out of the overbought. Now you're looking for the same thing, looking for it to hit the midpoint. Right here, looking for it to hit the midpoint and close down off the midpoint. So right here, we'd look for the down close. Right, and there's your down close. There's your entry. Bam. Now you're looking for the same thing, hit the midpoint and give you the down close. It didn't give you the down close there, so you wouldn't be doing anything there. Here, you're looking for it to hit the midpoint, which it did right there, and give you the down close. So on that bar right there, you could have sold that down close right there. Okay. On this one, still looking for it to hit the midpoint, but it would have gone all the way up here. That wasn't a good trade right there. All right. Right here, you're looking for it to hit the midpoint and then sell it. So hit the midpoint right there. That would have probably stopped me out. I would have taken that aggressively and stopped out on it to the tick. This one right here, looking for it to hit the midpoint, give you a down close. It didn't do that. You might have taken this down close right here, which would have been okay. It's going to flip the YBR here eventually, but right here where it hit the midpoint, down close, that would have worked out. Went through the midpoint, I would have skipped that. Right here, hit the midpoint, gave it the down close, that would have worked out. right here, hit the midpoint, gave you the down close, that would have worked out. Right here did not hit the midpoint. You wouldn't have gotten anything there. You wouldn't have gotten anything there. This one right here hit the midpoint, gave you the down close. That would have worked out. Eventually, you're going to flip the YBR over, I know. Right here, hit the midpoint, but it was above the midpoint. I would have skipped that one. Right here, hit the midpoint, give it the down close. I had to taken that, but then it flips the YBR over. So now you're hitting the midpoint, and you're coming out of the oversold is what you're looking for. So right here, you came out of the oversold right there. Good trade. Right here, nothing. Right here, nothing. 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 All the way over here. Gotta bring it down. Nothing. You gotta wait. After it doesn't go to the overbought, after the first one, it didn't go into the overbought, you don't do any of those. You wait for it to come over here. Now it's flipped to the other side. So now you're looking for shorts. Right? And this right here was the first one. Okay. And this right here was good. Then it flipped it over again. So you're looking for something off the midpoint right there. Off the midpoint. I wouldn't have done that. Well, I would have done that. I wouldn't have. That I would not. That I would not. Now, the reason I'm saying I would not is because it was so far away from the midpoint. The close was way down here. It got so far away from the midpoint. On this one, it was right here, never got anywhere near the midpoint before it moved up. Do you see that? Anyway, that was the yes. And on the yes, we ended up with plus 19. All right, so the NQ, where we had the most trades today. Let's go back to the beginning of that. You can see them all right there. We had a break even to begin with, followed up with another break even right there. Then finally, we got a little bit of traction. We got 4 ticks, and then we got 75 ticks. It got us up to 79, then break even, another break even. Then we went from 79 to 103, then 103 to 119. And then I messed this one up. And my sell stop limit too close. I had it at 70. Was it? Right. I was looking for it to give us a down close here off of here, and I had it 1 point too close, not 1 tick, but 1 full point too close. And it filled me, and I ended up stopping out minus 60 ticks on that one. Right. And let's see, during the break. Now you blow the YBR, so you're looking for things off the midpoint. When it comes off out of the overbought, off the midpoint, or it goes into the overbought at the midpoint. It's like this one right here went into the overbought at the midpoint, you sell it. This one right here went into the overbought at the midpoint, you sell it. This one you would have skipped. You would have skipped anything that didn't make it down into the oversold. So you would have skipped all the way over to here. Right at the midpoint. See, without even looking at price. With this one right here, you would have taken that, whatever that did. All right, that gave you enough to stop to break even or take a little profit. Right, but after that, it didn't make it into the oversold, didn't make it into the oversold, didn't make it into the oversold. So none of these coming out of the overbought matter. Right there, it finally made it. So this one is where it starts to count again, right here. So that would have been a good trade there. This one, if you sold it when it came out of the overbought, right here, that would have worked out just fine. This one right here never made it anywhere near the midpoint. Wouldn't have done anything there. This one didn't get near the midpoint. Wouldn't have done anything there. This one right here, you could have sold off the midpoint. Would have been enough to get you stopped to break even, take a little profit. This is the NQ, so these are 47 range bars. So there's plenty of room to take profit from the top of that bar to the bottom. Plenty of room to take profit. All right. You would have skipped this because that one didn't make it into the oversold. And then here, you would have skipped that, skip that. Then it flipped around over here. You wouldn't have done anything there. That would have stopped you out, finally. Could have stuff out right there. Okay, so you would have been looking for this one right here from the midpoint, would have been good enough to get some profit. This one right here, I wouldn't have done. Flipped around the other way, I wouldn't have done that. I would have shorted there, that would have been okay. Now, when I'm saying all this, what I'm looking at, like right here, when I say I would have shorted there, that would have been okay. Now, once it flipped around to the upside here, I'm looking for it to get up to the midpoint and get into the overbought. All right. So right there, it gets up to the overbought, and you're at the midpoint. So at that point, right there, you sell the open of the next bar. Right there. What was it? Now you sell the open of the next bar. That right there would have stopped me up, but I would have taken it. And right here, it gets up to the midpoint, and you're getting into the overbought at the same time. So that's a good place to sell. Same thing as the last one right there. I would have sold the open of that bar, so I would have gotten good profit on that one. This one right here, pretty much the same thing, but this went a little bit too high above the midpoint. I might have waited till it came out of the midpoint, came out of the overbought, like right there. Right? And then you wouldn't have done anything because it didn't get down to the oversold until all the way over here. And then the YBR would flip to the other side, so you wouldn't be doing anything anyway. That brings us current. All right, so on the NQ, we ended up with 59 after that mistake I made at the end. And so here we are now. And right now, the gold is a little bit crunched up. It's not too crunched up, I guess. If we made it into the overbought right here, well, we have a chance for a pretty good trade here, right? Going to come out of the oversold on an up close, and then the bar after that would be another up close that would put us right at the midpoint. That's what we'd be looking for there. Okay. Nothing here on the Russell. We could have something here on the, yes, we're not quite there yet. And we could have something here on the NQ. It's not there yet either. All right, a down close on this bar could bring us right here to the midpoint, which would be a pretty good place to trade from. Okay, that's all that is. The midpoint is a good place to trade from. Okay, you could take all the signals as they trigger. You could blindly get in there and just take all the signals mechanically as they trigger. You can have a lot of trades. Or you can take them when they pull back to the midpoint. The easy and obvious trades. Okay, it's up to you. All right, so on the gold, you want that to pull up. Get us up to here. It's not going to do it on the first bar or the second bar. So you're going to have a flat spot up here. It's going to have to come out of the overbought. An up close here on the ES would be an okay trade to take. All right, it's got a low here of 33.5. We're buying 35.5 on that one. Like this. Okay, we need the up close. I think the low's at 33.5. I messed one of those up today already. Hopefully, no. Let's check. Let's see. The low is at 33.5. I was right about that. Okay, so 35.5 was the right place to have that order waiting. And so far, it's not working out for us, but it should. Should bring us up to the swing high, and we have to 36.75. We should get our stop to break even. Vortex in profit. There it is. Stop going break even. There's 36.75. I'm going to lock in 4 and 8. And there we go. 8 ticks. You saw that, right? How we were able to walk right through that whole thing. Down here, the low of this bar, plus 8 ticks is what I was looking for. Then I was looking for the swing high right there. And we got all that.
Nice.
It's pretty easy trade to see and take.
Hey, I know you've been busy, so you probably didn't see this latest news flash.
I didn't. What's the latest thing?
Iran fires missiles towards U.S. airbase in Qatar. Qatar says it successfully intercepted the missile attack. No incidents or casualties were reported. Oil falls as Iran's response spares energy assets. The missile strike on Qatar was telegraphed, had been expected by the U.S. and its allies, according to a person familiar with Western intelligence. So, there we go.
Like I said this morning.
Pretty soon they'll be down to throwing rocks.
Yeah.
Admittedly, that did work for a little shepherd boy named David back in the day. But
Yes.
I don't know if it's going to work this time.
I don't think so. We know how to catch the rocks.
My concern is all the people that came into our country unvetted during the past administration. So the sleeper cells, well, we'll just put it in God's hands and leave it there.
That's all we can do. That's why I say, Dwayne, you can watch the news, but all it's going to do is frustrate you. There's nothing you can do about it.
That's right.
You know who you're going to vote for. I know who I'm going to vote for.
Yeah.
Other than that, that's where my say ends. Unless I'm going to go protest or some ridiculous thing like that, but that's not me.
The Bluegrass Festival, which was held in the town square in Prescott, that's where all their festivals are held, rodeo days and all that. Margie, my sister-in-law, who's there house sitting for some wealthy people, she said there was a huge crowd for the Bluegrass Festival, but she said there was an even bigger crowd for No King's Day. They had some kind of march, protest, whatever. We already have a No King's Day. It's called July 4th.
Yes.
Independence Day. So,
well,
anyway.
That's people who,
Yeah. And Prescott is like a retirement town. People go there to retire. The median age, I think, is like 60. So, I don't know. I guess it takes all kinds. So.
Yes. Don't these people have anything else to do? I guess they don't.
I found just right outside of Prescott, I found 2,000 acres. It's unimproved, it's raw land, but it's 40 grand.
Wow.
Now, if you go to town and you want to get like just a building lot, to put your little house on, you're talking 40, 50 grand. For a building lot. I'm talking about 2,000 acres. I can just see a master plan community there. I'm trying so hard to get my wife to catch the vision. Because my thought is you get the land and you get an architect, or you call the architect professor at ASU and say, do any of your students need a project for their thesis? Well, I'm sure there is. Well, why don't you have them draw us up a plan for this master plan community? I'll send you the plat map.
2,000 acres. That's a lot of land.
I know. And imagine a master. So, I don't have the financial wherewithal to build that kind of a community, but I could figure a way to get the land and to get maybe a semi-free architectural rendering of the master community, and then just flip the thing without ever putting a shovel in the ground. So, we'll see.
Well, it's a plan. It's the beginning of a plan. It's a seed.
That's Dwayne spilling the beans on a live broadcast in case somebody's looking to do a joint venture. So,
yes.
It's not a recommendation to invest in land on Prescott. You have to talk to your licensed investment professional for something like that. But just telling you what I'm thinking. Hey, I was asked, maybe you got a trade set up and now's not the good time. But the new indicators that came out like last week, some people want to know, how do you put those on?
You come down here in the TV Trades range trigger, and you can click show retracement levels right there.
Okay, and that's it. Just one click.
Check that. Yep. That's it.
Man,
You got to put in the password, but that's it.
That's pretty simple.
It is, and that will put them on. There is the middle thing. That's on the other. It's on the other tab. It's on the style tab. I think I had that go on automatically, but I'm not sure.
Retrace. Okay.
Yep. You got to check that box. And down here, if you want to fill the channel color, this is where you control that right here. Channel fill.
You
I
thought
think.
of everything.
Let me see. Yeah, let's refill that right there.
Nice. Okay. I hope those who are questioning it are listening in now. If
Yeah,
not,
I know there were a couple of guys that didn't. I sent them emails.
If not, I'll be able to tell you.
Yes.
If you ask me again.
Yes. All right, so it is 1:25 and we are not at the midpoint here. We're not at the midpoint there. We're at the midpoint here. We could sell the gold right here, right now, if you wanted to, rather than wait for it to give you the down close. You could sell it here saying it's an aggressive short trade because it just went into the overbought as it hit the midpoint right there. I did. I'm gonna go to break even on it right now, and I'm out of break even. But you could also wait for the down close and get back into it right now. Conservatively, you could get into it right now. It's still a valid trade here conservatively. Okay, if you want to wait for the conservative trade where it came out of the overbought, I could take it again right here. As a matter of fact, this is a conservative trade, but it should make it down to the prior swing low. The conservative part should. If we look at it, yeah, there's only one way. You have to click the one button that's in there down here. Actually, go indicators. You invite on. You got to put the latest one on. Right? Make sure you got the latest trigger. Because if you don't have the latest one, it's not even going to have the things down here. It's down here at the bottom. And check. Where is it? Tuesday's range trigger. Oh, I'm on the style tab. All right, you hit the retrace thing. Hang on, I took that conservative trade there on the gold too, guys. Wow. I just hit all 25 ticks on that. I took the conservative trade there too, and it just gave me all 25 ticks. I was bringing it over to show you. I was going to bump my stop to break even, but I never had a chance. Click this retracement levels right here. I got to get rid of that question mark. But I don't know why I'm forgetting what's in the middle of the night. It says show retracement levels, question mark. I was probably thinking question mark and I typed it. But anyway, check that little box right there. Put in the password, check that little box. And then on this side, hit the 50% retrace. Okay. And down here, channel fill, that's going to be automatically checked, but you can change what you need in there. Right. So that one right there, that gold trade, I got short at 94.5 and I filled it 92. So I did get all 25 ticks on that. I'll show you.
Now that makes up for a whole lot of break evens.
It does, right there. So 94.5, buy 92.
Plus, guys, where break evens, used to could be kind of spendy, especially when you're trading 10 contracts. But with the reduced commissions that we enjoy these days,
yes, it is.
It's not quite as expensive.
It's not at all.
Is it half, third? Maybe a
Well,
third.
yes. Well, on some things it's like a third. On everything it's at least a half, and on some things it's as much as almost a third. Like crude oil, we used to pay $7.90 or something like that.
Now, John B over in YouTube, he says, "Do you always move your stop that soon, Michael?"
I have a set thing for moving my stop, John. If you go here to mytradingiq.com, click on trade rules. These are the rules for moving the stop. It's all right in here.
Doesn't matter which market you're trading.
It doesn't matter what market it is.
Based on
the range
size of the range bars that you're using.
Yep. So I always move my stop based on the size of the range bar. Because it's all price action driven. Everything is price action driven. It's not, it doesn't really matter. It's not so much dollars and cents and stuff like that.
It's data driven like the Fed used to be. before it became
Yes.
opinion and political driven. But two
Yes.
feds have now come forward and said that they believe that lady, the Fed lady that spoke this morning, uh, one of the governors, they call him, I believe, she said that there's no reason in the world not to lower rates at the July meeting. So we now got two. How many of them are there? Four plus
I
three?
don't know. It seems like there's more than four.
Okay,
I'm not
maybe there
sure though.
is. Maybe there is.
I don't know. I mean, on busy days, it seems like there's like six of them talking.
Yeah. Well,
Okay.
I just know this. If Trump wants a full point cut, but if we just get a quarter point, that's going to
I'm gonna
kick
get
this
something.
economy in the pants, and we're going to see the market just fly high.
Yes. Yes.
Which
We're in a
basically on
good
the
position.
daily ES chart, from a technical standpoint, it looks like we're about to get a big move down, but maybe we don't. Maybe we
Yeah, I
don't.
lost all that stuff that I had printed on my daily chart a while back. It was on another layout, and I went to find it this morning. It doesn't seem to be there anymore.
Well, it looks like today there's a possibility. I mean, the markets are moving up, so it's probably less likely to happen than it was when I started talking about it at noon. But we could close below the daily BBC.
Oh, I know I don't have it. It's because I drew it on the M contract. Uh, yeah, it's not going to show it at all. Maybe if you go to continuous contract.
Yeah, that might work.
No, it doesn't look like it's going to keep it. Oh, that's unfortunate. But I know it was looking up here.
Look
It was
how many
looking
times
back
that
here is what all that
pullback
stuff
held.
was going to.
One,
Yep,
two,
right here.
3, 4 times. But
So right now, after that big gap, I was thinking last night, it's gonna fill that gap. And now, if we close up above the MA1 right here, this is a continuous contract. But if we
yeah,
close above the MA1,
yeah.
that would be a big thing right here.
Earlier, it was looking like we might close below the VVC, but now looking at it, I don't think so.
Now, on the daily, we bounced. Well, this is the continuous contract. If I go to the U contract, it might look just a little bit different. Yeah, the U contract looks a little bit different. Looks a lot different actually.
But that red and
But
falling,
yeah,
that's pretty strong resistance. So if it can overcome
we're right in the middle
that,
though.
yeah.
Right now, we're right in the middle of those two. So if we make it above that, we break above both of those in one session. That's a big deal.
Then we've got the
This,
bearish cross. You got that area right there you just hit, where we already found resistance.
mm-hmm.
If you bring your cursor down just a little bit
Yeah,
to that
right
high
here.
right there, if you look left, guys, you'll see a couple double tops there.
Yeah, right here.
And then just above that's the bearish cross, and that's usually good resistance, at least the first time up.
And this is all-time highs right here.
Actually, the all-time highs are December 6th.
December
So
6th.
they were on
Yes,
the
same
M
thing.
contract, but
Yeah,
with the U
it's right
contract,
here.
they may be about the same.
Yeah. Yep. It's a big deal. If we make it above that today, that's a big deal. If we close above that today. So,
John B said gold had a little trouble holding on to 3,400 today.
gold did 3,400. Yeah, well, we're below it right now. Let's look at that on a larger time
Are you
frame.
on the Q contract, John?
Let's see on the continuous. 3,400 is right here. So
Yeah, we're actually below it.
I would think more money is going to be coming into gold. The cryptos, what are they at right now? I looked at it.
Bitcoin had a nice rally today. We got, after the turbulence over the weekend, we were back at 102,000. We've been above 100,000 for 40 consecutive days.
That's good. That is good. I think we're going to see 120 before too long. But anyway, before we see 80, I think we're going to see 120. I bet that. But all right, so I am done. Let me show you guys how to take the free trial one more time. Go here to mytradingiq.com. Click on this right here. There's no credit card required for the trial. It's going to bring you to the registration form. Fill out the registration form, and you'll be sent everything you need to get your indicators indicating on your desktop. All right. I have a meeting coming up here right now, so
Okay.
I'm going to log off of this. Again, if anybody's got any questions about anything, email us at support@cfrn.net or support@mytradingiq.com. Okay. Either one of those will get to us and be happy to answer your questions. All right. Thanks, everyone. And pass this back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain River's largest city park.
And here we go.
Ready, almost.
Recap of the morning session.
Today it took 5 minutes and 2 trades to get to $1,125 with 10 contracts.
Great way to start the week.
Yes, it was. Thank you.
Last week we had over, I think it was 70 alerts, and we ended up with 2% stopped out. And
Wow.
those, out of all the weeks, and we're at 19,980 alerts right now.
Wow, so you hit 20 grand by the end of the week. By tomorrow, probably.
Well, probably may hit it tonight. I don't know.
Yeah.
Depends on how the markets behave.
Yes.
Okay, guys. Well, we'll pick up where we left off. And that would be, we got to the gold contract. Now, for those of you that may have come late, we go through each market in a very granular fashion. So if you missed the granular action that I went through about 30 minutes to an hour after I log off from this broadcast, you can go to youtube.com/CFRN and you can watch it all in its entirety. Now, all the markets gapped down last night except crude and gold and silver, I believe. So gold and crude gapped up. We opened here, ran all the way up to this weekly trading zone that was published last Monday, and then by the time the 30-minute candle closed, we had come back down and filled this window. So now that window was originally drawn to fill it going up, but works just as well coming back down. So we came down, we traded through the BVC, and we got down to this previous bullish cross. We spiked it a little bit. That was that initial low. So support sent us back to resistance. The pullback to the BVC holds more often than not. That dropped us to red and falling, where we found support. Now, we reached down and we almost filled that short window. I mean, there was enough to see the window was like 33.64, and the low here was 33.62. So I mean, there was $200 per contract available there. Didn't quite make it all the way to the bottom of the window. Buyers came in, drove us up. We got a beautiful leg. See how that step line crossed? We got a retracement to the BVC and the zone. The zone from last Monday held as support. And then we got a leg, a retracement, a leg. Hit that long target. Came back to the BVC, the pullback held. And now, in order for gold to move higher, it's got to overcome the step line. That's an obstacle. Blue and climbing directly above price. That's an obstacle. And then that high, and that high. So if I was going to draw a window, I guess it'd be up here. But I got to come down a little bit because this one didn't make it all the way to that zone. Plus, if you remember, you already have this week's zones. So, we'll call it 34.12 to 34.13. $100. Now, if price comes down through the BBC, I mean, it's going to do one or two, one or the other. Then you got a real nice window of opportunity here. The zone was 33.75/76. So 80 to 76, that would be $400 per contract traded. So either way it goes, you got a valid window of opportunity. Okay. All right. Silver. Hi ho. Silver didn't have that much of a gap, but the first candle, we opened right here, and then we were red all the way down to the short target. It spiked it a little bit. In fact, the low is this crevice right here. See, guys, where you got a wick pointing up and a wick pointing down, that spot right in the middle, that's an important price, important area, and that's where the market found support. So then we went all the way back up to last week's zone, and it ended up closing the first 30-minute candle. Then we kept hitting last week's zone, resistance, 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 and then we almost made it up to the long target. Where we made it is right here to where blue turned to red. Right there, boom. So that set us back to the BBC, the pullback held, and we get another run, we hit the target, then we overcome the target. And that is not an area that I would have anticipated necessarily resistant. Like I said, nobody knows what's going to happen next. But once you learn to read the chart, you can know with a great degree of certainty what the next high probability move is. But it just doesn't always do it. Our average over all the alerts and all the weeks has been 20% or less. So the pullback held, sent us back up, blue and climbing directly above price, became resistance. So that sent us back down all the way to here. And then we climbed right up to the bearish cross from Friday, right here. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. And that's a beautiful, perfect example. Now we pull back to the BBC, the pullback held, we're printing a green candle, but we're about to run into resistance at the step line. Then blue and climbing. And if I was going to draw a long window, remember you only need 2 pennies in silver to get your goal for the day. So that'd be something like that. Oh, we'll call it 36.29 to 36.31. Yeah, 29 to 31. Now, if it can't overcome this resistance, it's going to go look for support. So that window would be right here. And there's certainly enough to get 2 pennies out of that. Can't stretch it up, but you get the idea. Alright, so that covers all the markets. For anybody that came late, I'm not going to go through the long drawn out granular thing because you can go watch that on the YouTube channel when I'm done. But we got a double top with Friday right now in the ES. Okay. What was the high Friday? 60.71. Today's high 60.69 and 3/4. So we missed taking out Friday's high by a 1.5, 1.25, where it gave us a perfect double top. So if we continue the rally, well, better go look at this. That's a bearish cross right there, but that's already been addressed. So we can just do this. So we're talking 60.77 to 60.87. Is that 10 points? 77 to 87. Yeah, 10 points. Only takes 2 points to get your goal for the day. That's a week's work if that window fills completely. Now, If we're unable to take out Friday's high on this attempt that we're making right now, which would make this long window a viable opportunity, if we fade into the close, and there's the short side, 60.21 down to 60.14, 7 points. $50 a point, that's $350 per contract traded. If you've earned the right to trade 10 contracts, that's $3,500. The Dow. Well, the Dow is rocking. Let me take a peek. So this window's still valid. It hasn't been touched. See, Monday, Friday, Thursday, Wednesday, Tuesday. We were keying off last Monday's price action, and it's still valid. And if we get through that one, then this one's valid too. And if I try to drag them all the way across, it's going to screw everything up because I won't get it exactly right. So if you want to grab a screenshot, if you trade the Dow, if it matters to you, just snap it right now. The Russell. Okay. 2137 to 2139. $21.39. Now, if we take out that high, then we come over here and look. We grab this little area right here. Okay, that would be 2142, 2145. That would be 3 points. You need 2 points to get your goal for the day. And if things fall apart, there's such a small area to work with there, I'd go with this. If it doesn't trigger, it doesn't trigger. But I tell you what, by the time we have this conversation again tomorrow, at this time, this one or this one will probably have filled. Look where the NQ found resistance, right at the weekly zone. That was published last Monday. Now, tomorrow on the broadcast, you'll see this week's zones. But all the alerts that went out last night were based off last week's zones. The new zones don't come out till Monday morning at 6:15 a.m. Eastern. So, yep, that'll work. 22,107 up to 130. I don't know, 23 points at $20 a point. You can do the math. It's almost $500 per contract right there. And if things fall apart, you got potential support here, you got potential support here. Yeah, you could trade this little area right here. Now, when price reaches these windows of opportunity, go look at your range chart and make sure that you're getting an entry with surgical precision. And if price were to keep dropping, this would be one sweet spot right here. That would be 813 down to 73. At 30 points, $20 a point, $600 per contract traded. Crude oil. Whoa. Crude getting hammered. scrunch it up and see what we got. Okay. Oh no, we got to deal with this. Okay. Got to push that up a little bit. Yep. Okay. So we're talking on the short side, 68.40 down to 68. That's $400 per contract traded if price falls from the top of the window to the bottom of the window. I don't think there's going to be a rally here, so I'm not even going to. You have to overcome so many obstacles. We'd be way up here. Yeah, I just don't see that happening. Okay, gold. Okay, I think we drew in that window earlier, and we drew in that window earlier. Those are good to go. And we drew in that window just now and that window just now. So there you have it, the best of what I have to offer. And we're up against red and falling. Okay, we dipped below the BBC. We actually, it looks like we closed below it on Thursday. But then Friday we ran into resistance at red and falling. So if these indices are going to top out, I mean we're at the spot for them to top out right now. So if you want to learn how to do everything you've seen happen in today's broadcast, go to mytradingiq.com. Watch the videos, read the content, and when you're ready to become a member, send an email to support@cfrn.net. Just say, hey, I want to become a member. If you are a veteran, say, I want to become a member and I'm a veteran. And we'll make you a special veterans discount because we appreciate your service. Valerie will send you an email back that explains everything it means to become a passport holder, and she'll include a link for you to click so you can seal the deal. Number one, you're going to get 2 hours of interactive training every trading day. Live trades and live markets with real money. Michael explains every trade he takes, every move he makes, and the reason why. And you are listening, learning, trading along in your demo account until you actually qualify to go live. You don't come in and just start trading real money right away unless you just want to blow up another account. Our whole purpose in being here is so that you don't blow up another account. We can't prevent it, but if you follow the rules, it's going to be really hard to blow up another account. Not saying it can't happen, okay? 9 out of 10 new traders fail because they don't have a teacher. I wish I could say get the passport and you'll be the 1 out of 10. But even though we give you all the information you need and all the tools you need to do the job, we don't know if you have the patience and self-discipline to actually follow those rules. And maybe you don't right now, but over time you can develop it. But it's not something we can provide for you. That's something that you have to work on. Patience. Waiting for all the rules of the trade setup to manifest, and then not hesitate or jump the gun. Okay. Now, along with 2 hours of interactive group training every day, as a passport holder, you have access to private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. It's just how markets work. You get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening, typically 5 minutes ahead of the Globex Open at 6 p.m. Eastern. On Monday mornings at 6:15 a.m. Eastern, you'll get the weekly trading zones, and once they're published, they're carved in stone for the entire week. Every Thursday afternoon, you'll get an invitation to join us for the members-only workshop Thursday night at 8 p.m. Eastern. And you'll get the golden key that unlocks all the private channels in Telegram. Now, when you're on the trial, you have access to some channels in Telegram. You're able to ask questions of our traders, people just like you, who once stood in your shoes, blown up more accounts than we want to even discuss, who wondered, gosh, am I ever going to learn how to trade? And you can actually ask them about their journey and what it was like for them and how long it took them to catch on. Now, just because they did it in 2 weeks or 2 months or whatever, that doesn't mean that's how it's going to play out for you, because each person is different. But if you simply show up every day, ask lots of questions, and follow the rules, and develop your patience and self-discipline, there's no real reason why you couldn't become the 1 out of 10. Everything a trader needs, all under one roof. One low price. Just go here, and then email us here. We've tried to make it as simple as we possibly can. Okay, we're going to wrap it up with what? Our good word for the day. That's how we do it every day. The waiting strategy. Wow, I just talked about patience and self-discipline. Psalm 40, verse 1. I waited patiently for the Lord, and he inclined to me and heard my cry. When you're up against a problem that seems too big for you, or feel like you are in over your head, and you don't know what to do or which way to go, use the waiting strategy. That's the one David the psalmist used, and it worked for him. I waited patiently for the Lord, and he inclined to me and heard my cry. He also brought me up out of a horrible pit, out of the miry clay, and set my feet upon a rock, and established my steps. He put a new song in my mouth, praise to our God. Blessed is that man who makes the Lord his trust. My ears you have opened. That's Psalm 40, verse 1 through 6. Waiting is hard to do when you're anxious, and waiting patiently is even harder. Stop and think who you are waiting for. The Lord. He is Lord of every situation, including yours. There's a scripture. Be still and know that I am God. Waiting patiently can often lead to better outcomes. By disengaging and allowing yourself time to think and meditate on God's Word, it gives you time to gather more information, seek guidance, and view the situation from a different perspective. Waiting patiently also reduces stress, which means you'll be able to think more clearly and make wiser choices, rather than making a hasty decision that might complicate the situation further. Think of Abraham and Sarah. Man, they were old, like 90s. In their 90s. They had a child. Waiting for God to work is the wise way. Now, if you know your Bible, you know that Abraham Didn't wait. He figured, well, God said, but I'm gonna go sleep with my wife's handmaiden. She got pregnant, and well, that's a whole nother bad story because no sooner did she get pregnant, and boom, Sarah gets pregnant at 90. Yeah, yeah, you should read up on that. Let me sum it up like this: waiting for God to work is the wise way. While you are waiting, you think, man, he hasn't heard my prayers, he's doing nothing about this. I promise you, while you're waiting, he is working on your behalf. All things work together for the good of those who love God and are called according to his purpose. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.